What should we make of these results from Palo Alto Networks, the cybersecurity powerhouse? It's been a huge winner for my charitable trust. After the close, Palo Alto reported what I thought was an excellent quarter, an 8-cent earnings beat off a $1.48 basis, higher than expected sales, up 14% year over year. All the key enterprise software metrics like remaining performance obligation, next generation security, annualized recurring revenue, they were great too. On top of that, management gave us strong guidance for the current quarter and raised its full year forecast for 2025. Now, look, this stock has a habit of selling off in response to earnings. That's why we pick it up every single time. I always tell our club members it's the time to go. I say don't sweat it. The stock was up almost 15% since the company last reported in August. I think some investors want an even more bullish forecast. I say give me a break. This is the way it is. So let's take a closer look with Nikesh Arora, the chairman and CEO of Palo Alto Networks, to learn more about it and, of course, know more about its 2-for-1 split. Mr. Arora, welcome back to Mad Money.
Thank you very much, Jim.
Nikesh, it looks like the quarter and the year off to a strong start. Maybe you can fill us in on where the big orders are coming from.
Well, Jim, we're seeing, I said in our prepared remarks and earnings call, this idea we sort of talked about over the last 12 months about platformization is finally taking center stage. We looked at how many of our peers are talking about platforms, and now we see a 50% increase in our entire industry of everybody saying, I've got a platform too. But no, we know that we are the premium platform as it relates to network security, as it relates to cloud security, and as it relates to the new area of SIM and SOC management with AI. So we're seeing tremendous amounts of interest in people platformizing. We had 2 videos we showed, one from Colgate, one from NXP, where the customers used to be customers of our products in one category. They have gone soup to nuts, Palo Alto Networks across the board because it gets them better security, saves them money, and they have to do less work. So we are seeing that trend take off. We did 70 platformization deals this quarter, including some of our QRadar deals. So yeah, we're seeing generally strong demand across the board.
Well, you're seeing great momentum in the platformization. I think that you're also seeing, amazingly, I didn't count on this, a kind of a renaissance of firewall business. I mean, it just seems like there's a refresh going on that's falling into your lap.
Well, Jim, I said this to one of the analysts who asked the question. I said, we're delighted that some of our industry peers have refresh cycles because that allows our customers to say, finally, I can consolidate on a single platform with Palo Alto where I already have their SaaS heap. So I'm really excited about their refreshes. Obviously, we have a refresh every year because stuff that we sold 6 years ago comes towards end of life, and we got to get them new firewalls. But I'm delighted that people are running out of old firewalls, want new firewalls. And I've always maintained firewalls grow 4 to 6%, 5 to 8% in the market. We've constantly, steadily shown that. We've constantly taken market share. It's kind of like, every year our market share goes up 2 to 300 basis points in hardware, and it's sticky. We don't have churn. The only people who leave are the ones who go to the cloud. And I keep reading now that people want to set up hybrid strategies because cloud is getting expensive. So I think we're in a good space. We like where we are from a hardware perspective. We don't try and set the bar too high from an expectations perspective, but we think we're going to steadily execute against that 5 to 8% number.
Well, that's what we want. Now, we talked last time, we had just gotten the IBM deal. I figure at this point you can start giving us a little feel for how that's working.
Jim, I was mentioning one of my board members and I had this debate yesterday in our board meeting about which deal is going to be better for Palo Alto, IBM or our Prisma Access browser deal. My bet's on the IBM deal. He bet on the Prisma Access browser deal. I'm delighted they both do well because we both win. So the IBM deal has been amazing for us. We got 550 customers this quarter from IBM and QRoC. We closed $80 million of TCV business with them. We generated $1 billion pipeline together between IBM and us. We never had $1 billion pipeline between us and IBM ever in the history of our cybersecurity business. So this is good. This portends good business for us in the future. Of course, we have to go and do a lot of hard work, grind it out, win a lot of deals, but it's a forced event where people have to migrate towards the best SOC platform there is in the industry.
I'm glad you said that. I mean, sometimes we see these deals, they're for show, and I'll ask about people say, oh, yeah, that's a fine deal. This was clearly not for show. This is a very substantive, rigorous deal that you have with them.
Well, Jim, when you get a call from the really smart investors in the market, the private equity guys saying, oh, I didn't know this deal was in play. We would have loved to participate and say, oh, you must have done a good deal because those guys are very smart. And if they come looking and saying, why didn't we know about this? You feel like you've got a great deal. And it's great for both us and IBM. It's doing amazing for us, and it's doing amazing for them.
Okay, talk to me. I use you as my Sherpa to understand a lot of things. You always explain, and particularly over in San Francisco, the CNAP market and why this is so important. Explain this to me.
Jim, what's interesting is the cloud security market. As everybody went to the cloud, we were all deploying to the cloud, we made mistakes. Somebody's configured AWS wrong or GCP wrong, and it's not the AWS's fault, GCP, it's the user's responsibility. You wrote some code, and there's a whole class of security capability in cloud that has emerged called CNAPP, right? We have Prisma Cloud in there, but as we see the cloud workloads going to production, as we see people deploying AI, you're seeing that the security needs to be deployed in production. That's where cloud detection response starts to play a part. Our business there has gone 10x in the number of agents we've sold in the last year, right? Because we're seeing people saying, protect me in production and take the noise that I'm getting in the configuration space and prioritize it. So I only focus on fixing the most important things first so I can't be breached. So I think this market converges in the next 3 to 5 years. Cloud security goes through a sort of next cycle where cloud detection and response and SOC become equally important. That, again, points towards our XSIAM product, which we are so successfully selling over the last 2 years.
Got it. Now, let's talk about government business. First, we have a change in administration. I don't know if that makes things so that it would be more interesting, more hot, because obviously the enemies don't really care. They just want to beat us. But also, the Department of Defense, big contract in play. How are you doing with them?
Look, the U.S. government has a lot of legacy infrastructure that needs to be replaced or upgraded. You're seeing a lot of technology focus already in the new administration. A lot of people who are talking about how this thing needs to move faster, things need to get more optimized. The only way to make things faster and more optimized is to deploy better technology, right? The benefit of AI is only going to come if you deploy AI. That requires data centers. That requires new technology. So I think we're going to see increased technology investment from things that the new administration is going to do. And I said this in our earnings call. We see a lot of high standard deviation decisions, most likely, which hopefully will be good for us. But high standard deviation is high risk. High risk means you can have high return. So I'm positive. I'm hopeful that some of the changes that we're going to see are going to accelerate the investment in technology. To drive efficiency, you have to automate. To drive efficiency, you have to deploy AI. To do that, you have to do it securely. And that's where we all come in.
And then one last question. I am very happy as my trust is very happy. You give us a 2-for-1 split. People should recognize, more people should recognize, you're a science and math guy. You know that, though, even though it doesn't create more value, it does make it easier for people to buy a share.
We want to make sure that everybody in your club can go participate in our stock, Jim. So this is for you.
Well, they're certainly doing that. And that's why I'm so glad to have you on, and especially on an excellent quarter day. Nikesh Arora, Chairman and CEO of Palo Alto Networks. Nikesh, of course, it's great to have you on the show.
Thank you very much, Jim. Thank you for your
Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.